As the MindTree L&T takeover saga continues, MindTree co-founder and executive chairman Mr. Natarajan spoke to CNBC-TV18 exclusively earlier today. Rima, tell us what were the key takeaways?
I think the biggest takeaway is that the MindTree management now seems reconciled to the fact that Larsen & Toubro is going to be a key shareholder in MindTree. If you remember the kind of press conference that they had post the deal announcement on the 19th of March, they seemed a little more anti or more hostile to the takeover. But now when you heard the management speak, and this is just our interpretation of it, it just appears that they've reconciled and they've accepted that this is what it is. And the statement that he kept repeating is, we will do what is right for our customers, employees, as well as shareholders. Now, if it is in the interest of the employees and shareholders and the customers that the top management stays on, perhaps that is what they will do. So that is just our implication or interpretation of that. But I think that was a statement he kept repeating, and the way we read it is that maybe it's in the best interest of MindTree that the management stays on, and maybe they will have to do. He also dismissed any concerns on the client front. He also said that they've received tremendous response from the institutional investors. The institutional investors want the stakeholder value to be protected. He also, in a way, indicated that there is no competing offer which is coming in from, MindTree stable, and the independent committee will be giving its opinion on the L&T offer by the 10th of May. And when he asked about the merger, if there is a potential merger with L&T Infotech, which will create a larger company, he said size is not a big differentiator in IT services, and therefore it's not that if the company was bigger, MindTree would have won any more orders or had a greater opportunity. So on that front, he doesn't believe that size really matters to that extent. But I think the biggest takeaway could be, just purely could be, to the fact that MindTree management has accepted this. There is no competing offer possibly coming through. And if it is in the best interest of MindTree that the promoters stay on, they probably will.
Well, let's in fact hear out what the management had to tell us earlier today.
Clients are extremely supportive of us and they look forward to it being solved, and essentially I think we have no concerns on the clients or the business at this point in time. We remain optimistic that in spite of whatever be the outcome of the process which has got initiated now, we can certainly find a solution which safeguards the interests of our customers, MindTree Minds, and our shareholders. The shareholding is going to change, and L&T is most likely going to be a shareholder of a company, and that too a reasonable size, anywhere from 20% upwards. We always respect our shareholders, and to that extent we believe when there is a change in shareholding, there has to be a mutual discussion to understand the positioning of the company, how we can create value in the future for our shareholders, and work a common working model which then will deliver that value to our shareholders. I would not think that being a larger scale and size would help us win many opportunities. Again, even if you take MindTree's example now, being a sub-billion-dollar company, we only compete against companies which are at least 10 times, 20 times our size, and we win business, which is reflecting in the strong growth which are demonstrating.
We understand a panel has been formed to weigh the pros and cons of this L&T offer. When is it likely to give its opinion, and which are the FI investors that are backing you right now?
I think it's difficult to sort of state names of people who back, because in a way it's their sort of personal assessment of the situation, so it may not be appropriate for us to share names. But on the independent directors committee, I think we've set a new standard in governance by making it a committee of all the independent directors, and that committee has now decided to seek external experts who have not earlier worked to the company to give them the right insights. Based on an assessment of all the facts and information available to them, the committee will make its recommendation, if I recollect right, by the 10th of May.
So until April 16, we shouldn't expect anything, because that is the kind of a deadline for competing offers and stuff like that, right?
That's right.
Well, let's move on to some more stocks that are on the news today. PNB, they have sold close to 13% stake in PNB Housing, while Eicher Motors is in focus on the back of a brokerage downgrade. Abhishek, tell us first about PNB.
Well, PNB, Nigel, this part of their capitalization program. They have sold the stake in one of their subsidiaries, that is PNB Housing, of about 12.92%. So they have sold about 6.46% each to PE investors, which include the name of General Atlantic Group and Varde Capital. So if PNB will receive a cash of close to 1,852 crore, which will flow through their PNL, and therefore the Tier 1 ratio may increase to 10.2%. Remember that the government had infused about 5,900 crore in this quarter. So taking that into account, as well as this 1,852 crores, the Tier 1 ratio could increase to 10.2%. So PNB stake in PNB Housing Finance will come down to about 19.8%. Remember that CNBC-TV18 had broken this story on 11th of Feb that PNB is in talk with private equity players in terms of, selling their stake in PNB Housing. Back to you.
Thank you very much for that. And now to talk about the slowdown blues in the auto sector, Sonia joins it. Sonia, it looks like even Eicher Motors is not spared. Bank of America Merrill Lynch downgrades Eicher Motors now.
This is the first time that there's some dealer stress visible at the Royal Enfield end. That's the reason why this downgrade has come in. But remember, the stock has also fallen significantly from the top because of these very concerns. So perhaps it has come a little late in the day, this downgrade from Bank of America Merrill Lynch. Be that as it may, it has been downgraded to an underperform. The target price of Eicher Motors has been cut to 19,000 versus 26,000 earlier. They say that channel checks suggest that dealer stress has risen for the first time. Volumes have actually fallen by 20 to 30% in certain dealerships compared to a 3% growth that Royal Enfield has seen year to date. And Bank of America Merrill Lynch also believes that the company may face some margin trouble because they will have to offer more discounts and will have to up the dealer margins in order to offload the inventory. So they've downgraded the margins as well for Eicher Motors to 27.8% for FY21 versus 30% plus that they've seen in FY19 and FY18. They also believe that the EPS may also be under pressure, so they've lowered their FY20 EPS by almost 11%. Back to you.
Okay, all right. Thanks so much for that, Sonia. Well, before we slip into that short break, just keep an eye out on Z Entertainment. The stock was moving very, very well, but from the top, it's coming for some profit bookings. I think the intraday chart of Z Entertainment should come up for you on the screen. And a couple of these banking stocks, Kotak Mahindra Bank has moved lower. Remember, some of them moved very, very well in the past series or so. So giving back some of what they put on. And you have ITC, that's sitting with a cut of around 1.2%. Quite a big part of that move has come just in the last 10 to 15 minutes odd. Slip into a short break, come back. We'll get you calls on how to trade the Nifty. Ashmi Gujral and Prakash Kaba will join us.